Good morning, sir.
Good morning, sir.
Yeah, good morning. PVR, good morning, welcome.
Good morning, all.
Sir.
Yeah, Ishwarya Darshana, all the best. Do well.
Thank you, sir. Thank you.
Yeah, go ahead.
Good morning, everyone. Welcome to our presentation on the recent amendments to LODR pertaining to Regulation 3023 and pertaining to related party transactions. Thank you all for joining. I invite KSR sir for the opening statements.
Good morning, my dear friends. And I can say relatives because there is a subject of related party transactions. Sometime back, I well remember in one of the conferences, maybe around 5-6 years back, I was saying that why don't you simply remove this concept of related party transactions and say all parties are related parties? And that solves a whole lot of problem, because what is the point you are trying to address is to see whether there is any profit parking, whether there is any transaction which is not in the ordinary course of business intended to benefit a party, whether related party or unrelated party, the company is supposed to be concerned. You know, the shareholders will have an information with respect to related party transactions. And yesterday I was sitting with the managing director of a company, of course, MSME, and the typical AS 18 statement was given, which says purchases, sales and all, but he was not aware whether purchases were made from the related party or the sales were made from the related party for the value that is written in the small chart under the AS 18, the financial statement. So I was telling him that whenever you read the financial statement, you must be able to read it as purchases from the other party by the company. So with respect to the company, we are saying whether it is purchases or sales or any other transaction, financial, non-financial, whatever it is. So with respect to the company, we need to understand the description of the nature of or categories of services or transactions. And I was looking at, the definition of related party and relative. You know, the interesting thing is we are all thinking that Companies Act and the Sebi regulations are probably tough. Then I realized yesterday, in fact, my colleague Preeta was only supposed to be complimented for that. She was drawing my attention to 24A of the Section 5 of the Insolvency Bankruptcy Code. And it is interesting to see there, the first item is related party is a person who is a relative of the individual or a relative of the spouse of the individual. Now, a related party who is a relative of the individual means, for the purpose of taking the relative of that individual alone, there is a definition with 19 specified classifications of people. Apart from that, it also says with respect to every relation of son, daughter, sister, and brother, their spouses shall also be included. Now, after all these 19 plus 4, 23, for spouse you do the other 23. So for each individual you will have 46, and for 46 you have B, C, D, E, F, G, H, I also. So the idea is ultimately, that is why I said in our world we can say nobody is an unrelated party. Ultimately everybody is related party. And you know, the way in which the structure or the definitions are structured, in LODR I was looking at promoter, but I could get it only in the other one, which is called the investor issue of capital disclosure, ICDR we say. If you go to that regulation, you see the language, an immediate relative of the promoter is described as any spouse of that person, agreed, any parent, agreed, brother, sister, child, and then here is the language, child of the person or of the spouse. child of the person or of the spouse. So naturally, it takes care of things that are possible. There is a separation between child of the person and child of the spouse. I am reminded about the earlier joke that we used to say, your son and my daughter are playing together. Something like that. You remember we used to, PVR is able to see it. So that kind of thing. Then you go to AS 24, India AS 24 talks about living in relationship as part of the related party. Therefore, definition is evolving. Related party term is widening. Structure is getting complicated. And so much so that the amendments have brought unrelated party into the task now. So therefore, only I am saying what I originally said 5-6 years before, bring everybody as party to the contracts, any party, whether there is arm's length or not. Material transactions, whether there is ordinary course of business or not. Is there any profit parking, diverting, or any other benefit flowing to somebody? Why should companies' funds flowing directly to the relatives alone be the yardstick? Companies' funds cannot go to anybody for that matter. That is why in export or import, we are always considering about the value of goods sent or value of goods received. Now today, therefore, under LODR, we are expanding the complications of the compliance requirements. And the complications in complying with this different from complications in securing the information, flow of information, and timely information, adequacy of information, prior approval requirements, putting a block on the wheel of progress of the company, because every time you need a pipeline ACB. NICB must be available on the pipeline. Switch on karo, ACB is available, present the facts, get the approval. That is how the requirements of LODR are today. And you are going to talk about doctrine of unrelated party, purpose and effect theory, benefit material modifications and non-material modifications, material related party transactions and non-material related party transactions. Complications galore. And with this kind of complicated situations and the requirements of the regulations, we have two young professionals between us. Darshana is there, Aishwarya is there. They are going to take you through the entire amendments that have come, and certain amendments are effective already and certain amendments are going to be effective from 1st April 2023. And therefore, this is a subject which we are going to keep on doing it. As author of the related party transactions, originally I thought this subject book is going to be the best one, because at all times this book will have some value. In legal practice, we used to say, if you are doing a first round litigation, you are going to be wedded to the client, litigant until the Supreme Court. Business is assured. Now over to Darshana and Aishwarya.
Thank you, sir. Thank you so much, sir, for the introduction. Just share our PPT. Now, before we start with our presentation, I would just like to give a brief overview regarding related party transactions captured by Section 188 of the Companies Act. Section 188 of the Companies Act categorizes related party transactions under two buckets. The first bucket relates to related party transactions which are in the ordinary course of business and at arm's length, and the second bucket comprising of related party transactions which cross the specified thresholds given under Rule 15 of Companies Meeting of the Board and its Powers, Rules 2014. In case a transaction, related party transaction is in the ordinary course of business and at arm's length, we escape the provisions of Section 188. However, if we cross the specified thresholds given under the rules of the Companies Act, we need approval of the board as well as the shareholders. The approval of the board is required to be taken at a board meeting, and by simply passing a circular resolution by circulation will not suffice. Section 188 also provides for ratification of related party transactions by the board or by the shareholders, as the case may be, within 3 months. In case such ratification is not done, it is voidable at the option of the board or the shareholders, as the case may be.
Section 188 of the Companies Act also states that any related party, while a related party transaction is being discussed, will refrain from voting on such agenda item where such related party transaction is being discussed. Section 184 of the Companies Act states that wherever a related party transaction is being discussed, the related party shall disclose its interest and concern with regards to such related party transactions. Now let's start with our presentation. Today we are just going to talk about listed entities. And since we are talking about listed entities, Sebi LODR Regulations 2015 comes into play. There are changes made by the 6th LODR Amendment Regulations 2021. These changes brought to the current regulations are extremely significant for listed entities. Today, we'll be discussing the implication of the change made to Sebi LODR 2015. Now, let's look at the timeline. A report was given by the Sebi Working Group on related party transactions on 21st January 2020. The working group has taken a comprehensive look at the current requirements pertaining to related parties and related party transactions by listed entities and made its recommendations after taking into account the following: enhancing the transparency, improving quality of information that investors have access to, better approval processes by listed entities, and more robust enforcement mechanism. Then the Sebi LODR 6th Amendment Regulations 2021 were notified on 9th November 2021, which we'll be discussing at length. Next, it was followed by a few circulars. A Sebi circular was released on 22nd November 21, where it discusses the specific minimum information to be placed before the audit committee for the approval of proposed related party transactions, the information that should be part of the explanatory statement of the notice being sent to shareholders seeking their approval, specified format by Sebi of reporting of related party transactions to stock exchanges. Then a circular came on 7th January 2022, which spoke about the applicability of the reporting format to high-value debt-listed entities also. A Sebi circular dated 30th March 2022 gave clarifications for existing related party transactions and applicable approvals required for the same. All these circulars have become applicable from 1st April 2022. Now, as we discuss the 6th Amendment regulations of Sebi LODR, there are a few major highlights, such as the widened definition of related parties, the expanded definition of related party transactions, increase in the scope of audit committee with a special focus given on independent directors. As we all know now that related party transactions can be approved only by independent directors of the audit committee. There are changes in the threshold limit of materiality. Prior shareholders' approval is required now. We discuss about material modifications, and there are revised disclosure formats also. So let's talk about the widened definition of related parties. When it comes to listed entities, we cannot just talk about the definition mentioned under Section 2, subsection 76 of the Companies Act 2013. We also have to talk about the applicable accounting standards. And since we are discussing about listed entities, it means Ind AS 24. In addition to these two, the definition of related party transaction in Sebi LODR, there are two other extended limbs. First being any person or entity belonging to promoter or promoter group irrespective of its shareholding, which means any person who belongs to the promoter or promoter group, even if it does not hold any shareholding in the listed entity, will still be constituted as a related party. Prior to this amendment, 20% shareholding was required by any person or entity belonging to the promoter or promoter group in order to constitute as a related party. So now, if you belong to if you're a person or entity belonging to a promoter or promoter group, even if you don't hold any shareholding, so there's no need of looking at the shareholding of such a person or entity, you will be regarded as a related party. Next comes any person or entity holding equity shares either directly or on beneficial interest basis under Section 89 of the Companies Act 2013. So here there are two thresholds given. Shareholding of 20% or more with effect from 1st April 22, which gets reduced to 10% with effect from 1st April 2023, which means there will be an increase in the number of related parties with effect from 1st April 2023. So here we are only talking about the direct shareholding of a person or entity and the shareholding held in beneficial capacity by giving a declaration under Section 89 of the Companies Act and not 90, because here we are not talking about indirect holding. Therefore, and this holding needs to be seen at any point of time during the last financial year. This amendment is effective from 1st April 2022. So retrospectively, we will do the examination of the holding at any point of time in financial year 21-22. So if in the current year, our shareholding increases and crosses the 20%, or it was more than 20%, but in the current year goes below 20%, or we have nil shareholding in the current year, it does not matter. Only in financial year 21-22, if you cross this threshold of 20% or more shareholding, you will be categorized as related party for the year 22-23. Now, since I said that this shareholding is direct shareholding or shareholding in beneficial capacity, let's take an example. A husband holds 6% shares in an entity and the wife has 5% shares of the entity. Here we cannot club this 16% and 5% and say it's 21% and it crosses the threshold of 20% given under the regulation, because there is no aggregation of shareholding done under the provisions of this regulation. Similarly, if a person holds 16% and the HUF of which he is a Karta holds 5%, still he will not be categorized as a related party, because he, by simply being a Karta, he's just a representative of the shares held by the HUF, which is by the family. So you cannot aggregate shareholding. We will only restrict ourselves to direct shareholding or shareholding in beneficial capacity by giving a declaration under Section 89 of the Companies Act. Next, let's come to the enlarged scope of related party transactions. Earlier, related party transactions would only mean transactions of the listed entity with its related parties. However, the 6th Amendment regulation to LODR has widened the scope of related party transactions and has brought related party transactions of the subsidiary entities also to constitute as related party transactions. With effect from 1st April 2022, there are 4 transactions which will constitute as a related party transaction. A transaction between the listed entity and its subsidiary, which is a related party or any related party of the listed entity, a listed entity with related party of its subsidiary, subsidiary of listed entity with related party of listed entity, and subsidiary with its own related parties. Let's understand this by way of an illustration. Here L is a listed entity. M and N are its subsidiaries. L1, L2, M1, N2, N1, N2 are the related parties of L, M and N respectively. So here the transaction between the listed entities and its related party, which is L, L1, L with M, L with N, L now listed entity having a transaction with related party of subsidiary, which is LM1, LM2, LN1, LN2. Next, transaction between the subsidiary with the related party of the subsidiary, which is MM1, MM2, NN1, NN2. Next, we come to the transaction between the subsidiary and related party of the listed entity. NL2, NL1, ML1, and ML2. So by this illustration, it is easy to understand the related party transactions which have now come under the scope of the definition of related party transactions as per Sebi LODR. Next, we come to the second part of this definition, which will be effective from 1st April 2023, where the following transactions will also be considered as related party transactions. This is one of the most important change brought by the amendment, that now while testing a transaction, whether it's a related party transaction or not, we shall not only look at the transactions done with related parties. Now regulation goes a step further and states that irrespective of whether you are doing a transaction with related party or not, if the transaction has the purpose and effect of benefiting a related party, such transaction shall also be considered as related party transaction. So the benefit should go either to the related party of the listed entity or related party of its subsidiaries. This means when the company does a transaction with the unrelated party with the purpose and effect of benefiting the related party of the listed entity or its subsidiary, in order to mask the related party transactions, when such transactions are now also covered under the ambit of related party transactions. Because if your purpose and effect was to benefit your own related parties, then nothing would have stopped you from entering into a related party transaction. So now just by doing a transaction with unrelated party, we cannot get away with saying that it's not a related party transaction. We will fall under the ambit of related party transactions. The words purpose and effect have been used cumulatively here by adding a conjunctive and. Hence, both the purpose and effect should be present in order to direct that a transaction is a related party transaction. This part of the definition is applicable from 1st April 2023.
So, Aishwarya, do you say that post facto only we will be looking at the effect of it? Because intended effect need not be the actual effect. Purpose and effect. So we can say that the effect will be known only after the transaction is put through. Post facto.
Yes.
In that case, prior approval concept will get difficulty, no? So the purpose and effect, if you want to see the intended effect, yes, prior approval is possible. But when it say purpose and effect, and it should be cumulatively understood, and effect can be understood only at the end of the transaction.
Yes, sir.
Or transaction value and period. So there is a difficulty to really know what is the effect or what is the intended effect. Intended effect will be easily understood. And when you want to do really an effect, this thing, and only after the transaction period is over or transaction is over, the effect can be understood is what I want to share. Okay.
Okay, sir. Now let's just sum up the definition of related party transactions. The left half of the slide relates to the definition which will be effective from 1st April 2023. And the right part of the slide relates to the definition which has already become applicable from 1st April 2022. Now there's a change in the materiality definition, and the threshold on material RPTs have been made stringent. Earlier, only 10% of the consolidated turnover of a listed entity, if the transaction amount would exceed 10% of the consolidated turnover of listed entity, it would categorize as a material related party transaction. So a relative limit was given. However, now there is an absolute as well as a relative limit given, which is rupees 1,000 crore, which is the absolute limit, or 10% of annual consolidated turnover of listed entity, which is the relative limit. The lower of the two, if it exceeds, will categorize as a material related party transaction. However, there is a lower limit given for transactions which involve payment made to related party with respect to brand usage or royalty. It shall be only considered material if the transactions to be entered into individually or taken together with previous transactions during a financial year exceed 5% of the annual consolidated turnover of listed entity as per the last audited financial statements. So the turnover value will be as per the last audited financial statements in case of royalty as well as in general. And there is just a decrease in the threshold from 10% to 5% in case of payment towards royalty. Here are the few exclusions from related party transactions. For example, issue of specified security on preferential basis in compliance to SEBI ICDR regulations 2018. If there are non-convertible debentures that are issued on preferential basis in compliance to SEBI ICDR regulations, it will come under the ambit of related party transactions. Corporate actions like payment of dividend, subdivision or consolidation of securities, issue of shares through rights issue, bonus issue, buyback of securities are also excluded from the definition of related party transactions. Acceptance of FD by banks, NBFCD at the same terms applicable to all shareholders or public are excluded from related party transactions, provided they give disclosure to stock exchange. Units issued by mutual funds are also excluded from related party transactions. Mergers and acquisitions have also been excluded from the scope of related party transactions by an MCA circular that came in 2014. Now let's come to the applicability of Regulation 23. Regulation 23 is applicable to entity that has listed its specified securities on recognized stock exchange like the BSE, NSE, either on the main board or on SME exchange or on innovators growth platform. It is also applicable to listed entity which has listed its non-convertible debt securities and has an outstanding value of listed non-convertible debt securities of rupees 500 crore or above, which is high value debt listed entities. To those entities also, Regulation 23 is applicable. However, there is a relaxation given to high value debt listed entities that the provisions of Regulation 23 shall be on comply or explain basis till 31st March 2023 and thereafter on a mandatory basis. Now I would like to request my colleague Darshana to take you forward with the provisions of Regulation 23.
Thank you, Aishwarya. As rightly explained by her, we have identified already the related party transactions, the related parties, what are the applicability status, etc. Now, the next important aspect would be the information. So how do you collate these information? How do you, there are disclosure requirements also brought in by SEBI, stating that certain information has to be a part of the notices and explanatory statement. But these information, these identification of related parties, related party transactions, how do you collate it? On whom do you place the responsibility? Will be a vital question as well. So this information flow that is presented here helps you understand how to go about collecting the information and ensuring timely compliances, prior approvals, etc. So first, as a company on whom Regulation 23 will be applicable, and as a company on whom these amendments will have immediate effect, we have to first take a step on amending our RPT policy in line with the amendments. So while amending RPT policy, we have to identify a group of people who could be the senior management people who will be able to pull out some information in pursuance to identification of related parties, identification of RPT transactions, and also those informations that has been mentioned in the circular dated November 22nd and January 7th for the specified securities and high value debt securities. So some of the terms that's specified in the disclosure circular are type, material terms and particulars of the proposed transaction, name of the related party and its relationship, value of the proposed transaction, tenure of the proposed transaction, etc. So who will be held responsible? So if you look at the RPT policy, there has to be a group of people who we have called them as management here, who can be called as a group of people who will be able to pull out these information and present the same to the audit committee, so that the audit committee is able to take an informed decision. Because Regulation 23(2) of the SEBI LODR gives specific power to the audit committee to give prior approval to these transactions. So a thorough understanding of all the information is important, and hence identification of this group of people who shall be responsible for providing all the relevant information is the first and foremost step. Second, when these information is placed before the audit committee in compliance with the disclosure requirements as specified in November 22nd and Jan 7th for high value debt securities. If that is done, now it is a duty of the audit committee to go through all these information. Based on that, identify whether the transaction will come under the ordinary course of business or at the arm's length basis. So all the prior approvals are given, and at a point when it is understood that it is not at arm's length basis or not in the ordinary course of business, then only a requirement of placing it before the board comes to play. So after that, when it is placed before the board for their approval and identification, when such a transaction, if they identify and understand as materiality has already been defined under Sebi LODR as a transaction which crosses rupees 1,000 crore or 10% of the consolidated turnover as per the last audit financial statement. Once if the transaction crosses that limit or the transaction is proposed to cross that limit, then we have to get the prior approval of the shareholders as per regulation 23(4). So the board identifies that and then transfers the same to the shareholders for their prior approval. And at the end of it, there is a requirement for half yearly submissions to the stock exchange. So ultimately, the information goes to the stock exchange as well. So this is the flow of our information. It starts with the management. We are calling them as a group of people. It is not the regular management. The group of people who are required to identify the information and submit to the audit committee. So it starts with the management, then goes to the audit committee, the board, the shareholders, and ultimately our stock exchange. So this is the information flow that we are portraying. Next, it is approval requirements and both under audit committee, board, as well as the shareholders at their respective meetings. Now, for this purpose, we are primarily looking at regulation 23(2) and regulation 23(4). Now, regulation 23(2) states that all the RPTs require prior approval of the audit committee, and the audit committee, as I said, is not just the usual composition. We are aware about the usual composition of audit committee. Regulation 18 lays down that audit committee shall have at least a minimum of 3 directors, out of which 2/3 shall be independent directors. But here we have a specific requirement with the latest amendment, which says that all the RPTs can only be approved by a group of independent directors. So in case of two out of 3, only those 2 people can take a decision regarding the related party transaction brought forth before the audit committee. So this is an important understanding. Secondly, all the RPTs, irrespective of their materiality or nature in the terms of ordinary course or arm's length basis, they have to be brought before the audit committee with all the relevant information. Now, this has to be given a prior approval by the audit committee as well. Now, our query comes with modification. What about modification? 23(2) states that all related party transactions and subsequent material modifications shall require prior approval of the audit committee of the listed entity. Now, it says that and subsequent material modification. So this implies that only material modification will require prior approval. And when you read it with section 177(1)(4), wherein there is just modification, where there is only subsequent modification, we understand there is a difference. As per section 177(1)(4), it states that subsequent modification only will require approval, whereas subsequent material modification will require prior approval as per SEBI regulation. So this difference has to be properly understood. Hence, all RPTs and subsequent material modification will require prior approval, and all subsequent modification will only require approval. But yes, the companies can, in their RPT policy, take a better way and make all the subsequent modification also under prior approval category. It is not wrong, but it is not barred by law as well. Law gives a leeway for subsequent modification, and because only approval is required under Companies Act, whereas material modification will require or attract prior approval. So this is another important thing that we have to keep in our mind. Now, RPTs to which subsidiary is a party and company is not a party. So those 2 sets of transactions are also a part of this amendment, which says that when there is a transaction between a subsidiary of a listed company with another party to which the listed entity is not a party, then such transaction shall require prior approval of the listed entity. In both cases where materiality threshold, a separate materiality threshold rather than the regular one is given. What is that materiality threshold? It says that 10% of the annual consolidated turnover as per the last audited financial statements of the listed entity. That is taken up and then that is compared with the proposed transaction. If that proposed transaction by the subsidiary company with any other party does not cross, then it is not an issue. If it crosses, then prior approval of listed entity is required. Now from 2023, that is 1st April 2023 onwards, the ambit of these transactions is again widened, and all those transactions entered between the listed subsidiary with any other party, provided the threshold of the transaction is entered with another threshold, which is 10% of the annual standalone turnover. So in the first point, it was 10% of the annual consolidated turnover of the listed entity, whereas in the second point, the threshold is 10% of the annual standalone turnover of the subsidiary. So the threshold is reduced to bring in more and more transactions under the purview, which has to be then approved by the audit committee of the listed entity. So by 2023, that is April 1st, 2023, the ambit of transactions to be approved by the listed entity, which is a holding company, will be huge. So the compliances for such company has to be taken up very seriously. Now, is there any exemption for these transactions? Yes, there is one exemption. For those transactions which are entered by the companies which fall under Regulation 15, Sub-Regulation 2. Which say we can call them a small listed companies if there is no specific terminology given, but those companies which have a net worth of which have a net worth of 25 crores and paid up capital of not exceeding 10 crore and net worth not exceeding 25 crore shall be considered as can be categorized as a small listed entity, or those companies which are listed in SME. For those companies, this provision will not apply. So that is an exemption given under LODR. Now, coming to the board approval status, prior approval of the board shall be necessary. Here we're just glancing at section 188. It is not our purview of discussion today, but we're just stating that for better clarity. All RPTs proposed to be entered into, not in the ordinary course of business and obviously not in the arm's length basis, regardless of their materiality threshold specified under Companies Act or Sebi LODR, has to go to the board. Now, RPTs were materiality thresholds which are intended to be placed before shareholders' approval. So when a transaction comes in before the board and the board identifies that these are material transactions as per LODR, it has to go to the shareholders. So before it goes to the shareholders, obviously a recommendation from the board has to happen, which is done at this stage. And all material modification to material related party transactions, which are again intended to be placed before the shareholders for approval. We have not gone to Regulation 23.4 because Regulation 23.4 is about shareholders approval, wherein it states that all material related party transaction and subsequent material modifications require prior approval. So before the transactions go there, it has to be approved by the respective board meetings, taking into consideration the recommendation of the ACs. And all related party transactions that are beyond the threshold prescribed under section 188 of the Act, read with Rule 15. There is a separate level of thresholds mentioned there. So once that is also triggered, the company will obviously, irrespective of whether the LODR thresholds are triggered, first, if that threshold is triggered also, the board will have to take it up and approve those transactions. So the board, these are the prior approval requirement of the board in these 4 points. Finally, this is transferred to the shareholders for their prior approval, which is again captured under Regulation 23.4. So as such, if you look at Regulation 23.4, there is no requirement of board because 23.2 states about audit committee, 23.3 states about omnibus approval and the respective requirements, and 23.4 goes about stating the requirements or approval requirements of the shareholder. But on analysis, there are certain situations that come up where the board approval also has to be passed. So now coming to the shareholders approval. Prior approval of the shareholder, as I stated in Regulation 23.4 speaks about the same. All material related party transactions and subsequent material modifications of the related party transactions. Both are covered under the regulation. Now, the next query that will come up in our mind is regarding the facts, regarding 2 points mentioned here under. First one is whether a subsequent modification that will make a non-material related party transaction into material related party transaction, will it come under purview of 23.4? From our analysis, we find it does. Because whenever a modification is being undertaken in such a manner that the materiality threshold of the proposed RPT is identified and entered into and crossed, then there is no question of not having the shareholder approval. So whether the modification be material or non-material, if that is converting the existing non-material RPT to a material RPT, then obviously the prior approval of the shareholder is warranted. Hence, we have to consider this point and bring it to the notice of the shareholder. Now, next one is all RPTs which are beyond the threshold of 188 and read with Rule 15 of the Companies Meeting of Code and its Powers Rules 2014. So these are the approval requirements under the under Regulation 23(4). Again, there is an exemption given to the small company, small listed company, as we stated earlier, which is defined under Regulation 15, Sub-Regulation 2, and also there are specific exemptions. Aishwarya had explained exclusions earlier. Now there are specific exemptions for approvals. First one, with a resolution plan. If any RPT is proposed as a part of the resolution plan under Section 31 of the IBC Code, subject that this event is being disclosed, this event was already disclosed to the stock exchange within the time frame given in the regulation, then that will not require or warrant approval of shareholder, because in the process itself already we are going or taking the approvals, necessary approvals as per the IBC code. Again, that has to be, it is not necessary that it needs to be brought under the purview of this regulation, and again another set of approvals are required. So it is exempted. Second exemptions is regarding the transactions entered into between two government companies. Government companies are those companies as defined under Section 2, Clause 45 of the Companies Act. Now, apart from that, there are two more specific exemptions. First one, when a transaction is entered into between a holding company and its wholly owned subsidiaries whose accounts are consolidated with the holding company, then such a transaction need not be placed before the approval of the shareholders, prior approval of the shareholders. The next one comes as transactions entered into between the two wholly owned subsidiaries. If you look at it primarily, you will feel that it might not be a RPT, but yes, with the amendments that has been brought in, it will definitely fall under the purview of RPT, wherein the approval has to be taken by the shareholders of the listed entity. Yet again, that is given a specific exemption under 23(5), Regulation 23, Sub-Regulation 5, wherein if a transaction is entered into between two wholly owned subsidiaries of a listed holding company whose accounts are consolidated, it will not require the prior approval of the shareholders of the listed entity. So these are the specific exemptions that Sebi has given with regard to shareholders approval. Apart from that, so this actually takes care of the approval standards required. What are the information flow? Now, the third aspect or the third concept of our presentation is regarding the disclosure requirements. Because with the new amendments, there is a huge influx of information that needs to be given at each level, also not internally, but to the regulatory authorities. So this has been brought in specifically by disclosure circular dated November 22nd, 2021 and January 7th, 2022. So November 22nd, 2021 states that information to be reviewed by the audit committee about the approvals of the RPT. I've just mentioned few earlier. I can just share some of those. This is this pertaining circular we are talking about, and this is a set of regulations. This is the information provided to the shareholders, and this is one to be reviewed by the audit committee. So type, material terms, name of the RPT, value, tenure. If the transaction relates to any loans, such informations like details of the source of funds, where any financial indebtedness is incurred to make or give loans, etc., etc. So there is a lot of information that is to be collated and given to the respective approving bodies. I'll just run through. Information to be provided to the shareholders for consideration of RPTs are also listed here. And this is only applicable from 1st of April 2022, which we have crossed as on date. And also pertaining to this, if you look at this, the disclosure was only to all the listed entities that have listed their specified securities and all the recognized stock exchanges. So this disclosure requirement actually excluded high value debt securities, which was amended and which was found and rectified by January 7th circular, wherein a specific circular of disclosure requirements was also given to high value debt securities. Even this is only applicable from 1st April 2022. So both these circulars, disclosure circulars, shall be applicable from 1st April 2022. So that is it. And apart from that, there is a requirement to disclose certain information to the stock exchange on a half-yearly basis. So this format is given as per the circular dated November 22, 2021. So before this format came, we did not have a specific format for half-yearly disclosures. But after the influx of this format, we have a specific format provided by the Sebi itself for half-yearly disclosures to the stock exchange. So these are the disclosure requirements which from 1st April 2022, all the listed entities are required to comply with, and which we have already crossed. So all the compliances would have in fact started. Now coming to our last slide, apart from that, an important point that we have to keep in our mind is regarding review. The policy is required to be reviewed once in every 3 years. This is given in Regulation 23, Sub-Regulation 1. So with this, we have covered all the aspects of Regulation 23 and also disclosure requirements and also definition requirements. If there are any queries, please raise it. But before that, we would also like to show some transactions for your understanding and clarity.
As we can see, HC is the holding company. LC is the listed subsidiary of holding company HC. FS2 and FS1 are fellow subsidiaries of listed company LC. S is the subsidiary of listed company. Fellow subsidiary S2 holds 23% shares of subsidiary company S, and fellow subsidiary FS1 holds 26% shares of subsidiary S company. So if there's a transaction between the fellow subsidiary FS1 and subsidiary company S, it will constitute as a related party transaction because it is a transaction between subsidiary of a listed entity, that is S being a subsidiary of listed company LC, with its related party, that is related party of subsidiary company, because FS1 is a associate company of subsidiary S. Hence, this transaction between FS1 and S will constitute as a related party transaction.
In the same diagram, if we remove this associate requirement, in this situation, this subsidiary LC will be a subsidiary company of HC and S will be a subsidiary company of S, LC, and fellow subsidiaries FS1 and FS2 are that of listed companies. So this is the status. Now, if you look at it, and if there is a transaction on one hand by the subsidiary of a listed company and with the fellow subsidiary, will it classify as a related party transaction will be the question that will arise. So if you look at the transaction, yes, as per regulation 21ZC1, a listed entity, a related party transaction means a transaction involving a transfer of resources, services, or obligation between a listed entity or any of its subsidiaries on one hand. So here we have a listed entity or a subsidiary on one hand. Subsidiary company, yes, is a subsidiary of a listed entity. So one hand, it is clarified. On the other hand, we have a related party of the listed entity or any of its subsidiary. So this fellow subsidiary, if at all it was a fellow subsidiary, as Aishwarya had mentioned, it would qualify as a related party. Now, if this associate is removed, will it again qualify as a related party will be a question. Yes, because it is a subsidiary of a company to which subsidiary yes is also a subsidiary. Section 2, clause 87, first proviso says that a company shall deem to be a subsidiary company of the holding company, even if the control referred to as control or composition of the board or exercises or control more than 1/2 of the total voting power of another subsidiary company of the holding company. And section 276 of related party definition, point number 8B says that a subsidiary of a holding company to which it is also a subsidiary. So this associate is removed. This becomes a subsidiary of a holding company to which it is also a subsidiary. Means subsidiary company, yes, is a subsidiary of LC. In turn, it is also a subsidiary of HC. For the fellow subsidiary FS1 is a subsidiary of HC. So both these companies are subsidiary of a single holding company. Hence, it can be said as a related party of the subsidiary. Hence, the transaction will fall under related party transaction, and regulatory requirements under Regulation 23 will also get attracted. Next.
In the given scenario, there is a transaction between the subsidiary company S and company Y, which is an unrelated entity for subsidiary company S. So here there is a transaction between subsidiary of a listed entity with an unrelated party, which is company Y. However, the benefit derived from this transaction is for the listed company LC. So the transaction between subsidiary company S and company Y, which is for the benefit of listed company LC, will fall under the purview of related party transactions, as the definition of related party transactions has been widened, and we've already discussed that this leg of the definition will become applicable from 1st April 2023, where the transaction, if it's between the subsidiary of a listed entity with any unrelated party, and the benefit is given to the listed entity or any of its subsidiary, in this case, the benefit is given to the listed entity itself. Hence, it will constitute as a related party transaction.
And the last leg of our presentation is regarding the latest circular that has come on March 30th with a clarification with regard to the applicability of Regulation 23 for the existing transactions. The Sebi, the board has clarified that for an RPT that has been approved by the audit committee and shareholders already prior to the amendment or prior to 1st April 2022, all the approvals remain the same, and there is no requirement to take any fresh approval. However, if at all that is the proposed transaction, whereas the proposed transactions goes beyond the threshold already mentioned and makes it material, then a revised approval has to be taken in the first AGM to be held after 1st April 2022. So this clarification has also been brought in by Sebi on March 30th to bring in clarity on existing transactions. But this, if you can see, this point number 2 is in over and above the Regulation 23 sub-regulation 8 clarification inherently present in regulation. Yet another clarification was brought in for better clarity. So with this, we have come to the end of our presentation. In case of any doubt, kindly raise it, and we'll try to provide clarification. We thank you for your patient hearing.
So now you can close the screen share. Yes. I wanted to tell you about a material transaction that is not going to be called material transaction with the view in view of the definition of 1,000 crore or 10% or 20%, whatever 5% you want. I am just imagining a company in India running a factory profitably in Bangladesh, engaged in garment manufacturing, and setting up a unit in Ethiopia, sending best of its team in Bangladesh and India for the purpose of setting up the garment unit in Ethiopia, is a very material transaction of enduring benefit. But the value of the people that they are sent, let us say the 3 M's are sent, that is men, machines, and materials. The value may not be 1,000 crore, or value may not be of the criteria or threshold that is mentioned. However, the most material thing is the manpower, which is the leadership team, which is going to set up the project. And the Indian holding companies, controlling shareholders, promoters are going to be directly benefiting with the purpose and effect both working there. And yet it cannot be a material related party transaction because it may not be, beyond the threshold that is specified. So there are transactions which have huge benefit, and yet they may not fall within the meaning of the materiality threshold that is prescribed here. So you can imagine such a situation. The other thing I wanted to tell you, taking this opportunity, is I was going through yesterday the liability of independent directors. And I found, thanks to Jayalakshmi, who has given me the gist of cases, in some of the cases recently, the whole-time members of the Sebi, that is Securities and Exchange Board of India, have charged independent directors with respect to certain things, saying that they are part of the audit committee and they are knowledgeable financially and they have the information in their hands and therefore they are liable, is what the audit committee members, independent directors who are audit committee members are. In fact, the language of Sebi is that being part of the audit committee, they had access to the financial status of the company and they should have raised a red flag. For example, we are talking about the regulation 23 requiring independent directors who are the members of the audit committee to be forming the valid quorum, and their approval matters, not the others' approval. Others may also approve, but it is the approval of the independent directors who are part of the audit committee that matters. And now look at Sebi finding, the whole time members finding that you are part of the audit committee, you are having financial information, you know the financial status, you should have raised a red flag. Therefore, I am raising a PVR flag here because he is holding a red flag now, probably. That you must be careful about it. And let me give you this icing on the cake or silver lining also, that the Securities Appellate Tribunal has set aside this finding, saying that merely because somebody is sitting in the ACB, you can't fasten them with liability, saying that you should have raised red flag, because the independent directors, for that matter, all directors are entitled to believe and trust the management. Please understand this sentence. It's a very important sentence I'm making. They are entitled to believe and trust the representations made by the management and the expert opinions. This is very important. They cannot be raising red flag every time. They cannot run the affairs of the company or allow the running of affairs of the company with a suspicious mind. If there are inquiries they have to make, if they are really diligent, there is nothing in this earth to fasten liability under regulation 25 and section 149(12). There is a limited protection available to the independent directors. Therefore, I want to conclude by saying that the ideas being forming the valid quorum part of the audit committee is not required to be unreasonably worried about the complexity of the nature of work they are doing. As I told in the introductory remarks, pipeline ACB is what is required now, because you need approval for everything at the drop of the hat of the ACB. And for certain cases, the ACB independent directors alone will have to approve. And therefore, I wanted to add this point that there is no reason to worry. If you are diligent, if you are able to apply your mind, find there is nothing hanky-panky, there is nothing to hoodwink anybody's thing, you don't need to worry. And that's it. I just wanted to conclude it. If there are some queries from any person, we can look at the chat box or they can speak. We have another 5 minutes to go. Because I have another commitment at 11:15. In the current language, it is called hard stop. Somebody has raised a question already. Hand. Mr. Sunil Kumar Jain.
I have one question, sir. A company has not taken any prior approval for the RPT, but during the 2022, its purchases from the related party has exceeded the 10% limit. What course of action is available to this company? Particularly this limit of 10% has been exceeded because during the prior year 2021 the sale was low because of the COVID effect. So what course of action is there? Whether the company go for the ratification in the next AGM or some other course of action is available to this company?
See, always remember the ratification is the best one as a remedial. When approval is required, it is prior approval. When approval is not required, don't worry. At the time, it was not required. At the time, it did not exceed. Therefore, there is no contravention. But today, if the transactions are required in the business interest of the company, the law does not come in the way. Take approval, or if approval is forgotten, take a ratification, because the sooner you take the ratification, the better it would be. So ratification is the remedial measure available. Absolutely, I don't find any big problem in this. But yes, regulators can always say that there is a period of time, some days or months during which there was a contravention. which is liable to be slapped with monetary penalty. Maybe you can apply for waiver, you can apply for concession, you can, present the mitigating factors. And also say, as you rightly said, 2021 or for that matter, 21-22 also, the gross turnover of a company might be very low because of the pandemic, removing the business opportunity. Thank you.
Thank you, sir.
Yeah, Mr. PVR, you can lower your hand, Sunil Kumar Jain ji. Mr. PVR, you are on mute.
Can you hear me?
Absolutely.
Yeah. See, broadly, what I understand from today is, on one hand, the more and more laws are coming, even as the relations are also spreading everywhere, all over. It's not like the world is a small scale. I remember the earliest Tirunapallikudam was done for the single family. Somebody in the family, because he has so many grandchildren and children, he started a school. Today it increases. Now, if I think of an automobile company and also real estate, these are the two industries where the purchases of various material have to be done in order to give the finished products. Obviously, someone will be related in some form or other everywhere. Probably major mistakes have happened. Fearing that if we do not act, fearing that, so many forms have to be filled up and all, we go and take totally from strangers, we may end up in a soup also. So I think we should leave it to the experts like you to handle the situation as it comes. So the experts, they also have to keep on proving themselves that they are at pace with these new regulations to assure the industrialists who are in the manufacturing and marketing to continue their good job without doing anything hanky-panky, and the professionals will take care of filing the forms and other things. That's my view. I get it. Am I right?
Very nicely put it.